Hey traders, this is Mike Sir here. I've gotten a lot of requests from you guys that you wanted me to teach you how to trade currencies, specifically the Forex market. Now the reason may be the fact that it is the largest financial market in the world with over $6 trillion in daily trading volume, as well as a more stable market that is attractive to many traders compared to trading the volatile cryptocurrency market. Well, I'm happy to announce that I partnered with 8cap Partners, an award-winning Forex broker, to offer you a free course on how to make money in the Forex markets. They are a sponsor of this 3-part video series where I show you the tools and strategies that I use on a daily basis to analyze the currency market. So let's get started. In this part 1 video series, I'm going to first of all introduce you to the world of foreign exchange market, or commonly referred to as the Forex markets. Now, it's a global financial market where the world's currencies are exchanged. So, for example, someone who has US dollars and wants to exchange it into euros because he or she believes that the value of the US dollar will decline while the euro will rise in value. So basically, Forex traders speculate based on whether they believe a currency will appreciate or depreciate in value and profit from it. Also, it's a financial market that trades 24 hours a day, 6 days a week, which allows many traders to trade at any time throughout the day or night. In the Forex market, you can trade any currency from all around the world. In fact, there are over 180 currencies that you can trade. However, there are 6 major currencies that the majority of traders focus on, and they are the US dollar, Canadian dollar, euro, British pound, Swiss franc, Japanese yen, Australian dollar, and lastly, the New Zealand dollar. Typically in the Forex market, you don't buy one currency to go up in value, but rather you speculate based on the value of one currency relative to another currency, like in a currency pair. So what you as a Forex trader is trying to do is find the strongest currency and determine which is the weakest currency relative to it, and you would buy that currency pair. So for example, the euro versus the US dollar is a currency pair that pits the value of the euro relative to the value of the US dollar. So if you believe that the euro is the strongest currency and the value of the euro will go up, while you believe that the US dollar is the weakest currency relative to the euro, then you would buy the euro versus USD currency pair. The Forex market involves a huge number of currency pairs. However, only a handful are in high demand and are the most traded. In fact, more than 50% of the trades in the Forex market involve the US dollar. Now, the euro versus the US dollar currency pair is the most traded currency pair in the world, and the simple reason is because the economies of the US and the European Union are the largest ones. Now, the other popular currency pairs are the US dollar versus the Japanese yen, the British pound versus the US dollar versus the Canadian dollar, the British pound versus the Japanese yen, the Australian dollar versus the US dollar, and the Australian dollar versus the Japanese yen. Now, most Forex traders prefer to focus on these currency pairs because the price spreads of these pairs are the tightest, meaning that it's very easy to get in and out of these Forex trades with not much price disruption. So to reiterate, when you buy a currency pair, you are simultaneously buying one currency and selling another currency. So for example, for the euro versus US dollar currency pair, the euro is referred to as the base currency, as it's the first currency in any currency pair, and the currency quote shows how much the base currency is worth as a measure against the quote currency, which is the US dollar in this example. Now let's talk about the price movements in the Forex market. Now in the US stock market, stock price movements are measured in cents, while in the Forex market, it's measured by pips. It's the last decimal place of a currency price quote and is the smallest unit of price for any currency. For example, if the price of the British pound versus the US dollar pair went from 1.3220 to 1.3225, this means that the price went up 5 pips. Now typically most currency pairs go out to 4 decimal places. The only exception is the Japanese yen pairs, which only have 2 decimal places. Now let's talk about how we measure the size of a currency position. Now in the stock market, we talk about how many shares we buy or sell, while in the forex market, we say how many lots we buy or sell. Now a lot size means the number of currency units you buy or sell, and depending on the type of forex trading account that you open, there are 3 different lot size options that you can choose to trade. The standard size for a lot is 100,000 units of a currency. Now if you wish to trade smaller size, then the mini size for a lot is 10,000 units of a currency. And if you wish to trade even smaller, then there is a micro size for a lot, which is 1,000 units of a currency. Let me now show you an example of how you can make money in the forex by showing you the price movements of a currency pair along with the number of lots that you buy. So let's say you believe that the US dollar will rise relative to the value of the Canadian dollar. So you look to buy the currency pair, the US dollar versus Canadian dollar, at let's just say the exchange rate of 1.30. Now in this case, you are buying 1 lot of a mini size, which is equivalent to $10,000 USD. Now 2 weeks later, the value of the currency pair rises to 1.34 and you exchange your $10,000 USD back to Canadian dollars. And as a result, you end up making a profit of 400 Canadian dollars on the trade. If you want to trade currencies, all you need to do is open an account with a regulated forex broker such as 8cap. Now the forex market is not like the stock market, as there is no centralized exchange, and this is why it's important to have a broker who deals with multiple liquidity providers to get you the best price. Now let me take a few minutes here to outline why I've decided to partner with 8cap. They are an award-winning and regulated forex broker with multiple licenses including ASIC, SCB, SciSec, and FCA, so you can feel protected as a client. In fact, 8cap was named the best MT4 forex broker global at the Global Forex Awards in 2020. As well, they offer a superior trading environment with one of the tightest currency spreads in the industry. In addition to forex trading, you can trade CFDs, indices, commodities, company shares, and more than 300 cryptocurrencies on their platform. Lastly, one thing that's important to me in choosing a forex broker is customer reviews. Now, 8cap has 4.5 star reviews on Trustpilot, as well as 4.6 star reviews on Google. They are currently offering a special promotion for my viewers only, so if you sign up for an account today, you'll receive a 20% initial deposit bonus. Now please click on the link in the description box below to sign up for an account and start trading FX today. Before we outline the benefits and risk of trading currencies, please take a moment to like this video, hit that subscribe button if you haven't already, and tap on the notification bell. You'll be alerted when the next video comes out in this 3-part video course series on how to make money in the forex markets. Okay, let me outline the benefits of trading currencies for you. Now, as I mentioned, the currency markets trade 24 hours a day, 6 days a week, so you can literally trade anytime that you want, unlike the stock market that only has limited trading hours. In addition, many traders like trading the forex market because it's more stable and prices don't fluctuate as much. So for example, currencies typically don't move more than 1% in one day, let alone in 1 week. So how can you make a lot of money in the forex markets? Well, another reason why traders like the forex market is because the forex trading instrument offers high leverage. Most forex brokers typically offer leverage of 50 to 1, meaning that if you have $2,000, then you can control up to $100,000 of purchasing power. In addition, some brokers outside the US, like 8cap, can offer leverage as high as 500 to 1. Now, if you are consistently making money in currencies and are able to manage risk properly, This will help compound your returns dramatically. However, there is also risk in trading currencies because most traders don't know how to properly utilize leverage properly and end up blowing their accounts. Now I'll talk about how to properly utilize leverage in part 2 of this video series. Thanks for watching part 1 of the 3-part video series on how to make money in the Forex market. Part 2 will be released next week. Please make sure you hit the subscribe button and notification bell so you'll be alerted when the next video will be released. I'll see you all in the next video.